Alrighty guys, what is going on? Welcome back to the Best Investing Money Management channel on YouTube. In today's video, we are going to be talking about the best ETF every investor should have to get wealthy. I hope you guys enjoy it. If you guys get anything in value out of this video, hit that like button, subscribe to the channel. If you have any questions, concerns, make sure you guys ask them down below. And guys, this is by far my favorite ETF, so I hope you guys enjoy it. Roll that intro, let's go. Bam. Alright, so this ETF is ticker symbol VUG. This is a Vanguard Growth ETF. So one of the main reasons why I love this is because when you invest into this ETF, this has historically outperformed the S&P 500, the Dow Jones, and the NASDAQ. So you can pretty much count on a fantastic return year after year after year. And the beauty of it is on average it gets about 11% return, which I understand comparing it to a lot of growth stocks does not seem like a lot, but if you compare it to all those indexes which average about a 10% return, you're getting an extra 1% on your money. And I know you might be saying, well, Carter, it's only 1%, why do I care? Well, 1% over the course of 40 years that you invest could add up to hundreds of thousands of dollars plus the dividends that it offers. Not to mention, another reason why I love this ETF is because when you invest, it's very, very hard to pick and choose certain stocks. You know, one stat I always like to show you is, 95% of hedge funds actually can't even beat the S&P 500. So it's almost like it's better to have them pick and choose the stocks that historically beat the market. So the stocks in this ETF are companies like Apple, Microsoft, Google, Amazon, Tesla, and a whole bunch of other, fantastic ones as you guys can see. And this ETF, guys, is just beautiful for beginners because of the very, very low expense ratio. And expense ratio is almost like the fee that Vanguard charges for you guys to actually be a part of this ETF. But I know, my rule is keep it under 1%. This is way under 1%. It's actually about 0.04. So it's like $4 for every $10,000 you have invested. It's virtually nothing, but it's still something that you have to know. Not to mention, everybody should have this because of the dividends. This pays out a quarterly dividend. The last dividend was rated at about 30 cents. I've seen it as high as 50 cents, and I've also seen it as low as like in the 20 cents per quarter. And I know that doesn't seem like much, but if you're compounding your account, that's just going to be another stream of income that you can use to reinvest back into this ETF to get more shares, more dividends, and starting that snowball effect, or you could just use the money for, bills or something along those lines. Now that we have a good understanding of kind of all the finances, let's go look at it. Let's go look at the chart and see how well it looks. Let's go. Alrighty guys, so we have ticker symbol VUG up here. You guys can see this is the Vanguard Growth ETF. And look at the absolute strong performance, right? We have lows all the way down here at 160, some lows here at around 130. This was during that March crash, and you guys can see during that time it still paid a 40-cent dividend. But the beauty of it is look at this growth, right? We've seen a ton of buying pressure, and the stock in ETF has hit as high as $327. So this is an absolute beautiful return. If you would have bought at the lows, sold at the highs, you're doubling your money. But one of the main reasons right now why I love this, and I think everybody should pick up a couple of shares, is because we've seen some sell-off from it, right? On average, this thing was trading it for as high as $327, but it sold off down below $300. So it sold off over $30 of value, and all the way down here it sold off almost $100 of value. So the biggest thing with investing is using opportunity like this to pick up a couple of shares for this, because you understand it has that general upward trend. You understand through all the ups and downs of this ETF, we still had that annual return of about 11%. Plus, look at these dividends, 30 cents. We have almost a 50 cent. We have a 31 cent, 37, 38, 46. So you're going to be starting this compound effect of using all these dividends to build up your account. And the beauty of this is something that is completely passive, so you don't have to actively manage it. It's a great way to invest, guys. So that is it. I hope you guys enjoyed it. If you did, hit that like button and we will see you guys later. Take care, everyone. So guys, that is it. I hope you guys enjoyed the episode. If you did, hit that like button, subscribe. We will see you guys later. Remember to stay happy, stay positive, and stay safe. Take care.